Hello, everyone. I'm with Frank Giustra, and this, I hope, will be an interesting half hour or so of conversation. I'd like to thank the Denver Gold Forum for inviting us to do this. And I'd like to thank each one of you for dialing in or phoning in or becoming part of this yourself. And I hope, again, it's interesting for you. It's going to be interesting for me. Frank has a lot of views, I think, that I share, and a few maybe that we differ on. But I'll start out by just saying, Frank, you and I have known each other a long time.
Yes, we have.
I think we first met in the late 1980s. You were a financier to my very first gold company, Equinox Resources.
Yes, when I was in Zurich in 1988, I think it was.
That's exactly
running the Yorkton
right.
office. Yeah, it's a long time ago.
That's right. And yet, funnily enough, our stars have kind of migrated through the universe in parallel in some places and disparate in other places. But they've come back together again with my last company, which is Equinox Gold. I'll bracket my career with Equinox's, because you were chair of Leogold, and Equinox and Leogold just combined forces. So it's, to me, a very interesting way that in 35 years, how stars can cross over.
There must be something in the universe that brought us together. It has to have some hidden meaning, and I think that it probably bode well for the share price. So yeah, I'm happy that we bracketed our relationship with the first and last Equinox.
So let's talk about gold. This is a gold forum. Both of us are gold bulls. I know that. But why don't you tell the audience, tell the listeners why you like gold today?
Well, I think it's important that I spend a little bit of time just giving some background here, because it's really relevant to why we're here today with the current gold price and where we may be going. So I was always a history buff, and I really got obsessed with economic history back in the late 90s. And I was noticing some similarities between past currencies from the past, how they evolved, and the things that made almost all currencies in the past eventually fail. They all fail eventually. And I started to look at what was happening in the US, and I saw a change in the behavior of the US government, the Fed, and the consumer, US consumer. And it was something that coincided with the end of the Cold War, where America all of a sudden had global homogeny. And then their behavior changed. And it really started with Greenspan in the late 90s, accommodating almost every financial crisis with easy money. And by 2001, I'd already been thinking about it a lot, and then 9/11 happened. And 9/11 basically accelerated the whole process of that type of behavior, which I'll explain in a moment. So what happened? The Fed dropped its rates down to zero and kept them there, artificially low, for years to come. The Bush administration at the time entered into 2 wars and a forever war on terror, and also encouraged consumption to an already indebted society, and provided tax cuts. That, to me, was the writing on the wall. That's when I realized that we were going to go down a path that was very similar to what we've seen throughout the centuries, whether it was the Dutch guilder or the French assignat, the British pound. They've all made the same mistakes. And what are those mistakes? Overconsumption, lack of exports, too much debt, easy credit, and too many stupid wars. The combination of those things are what cause these problems to happen. So from 2001 to 2008, the artificial low rates created the 2008 financial crisis. That's what happened. It was really, people went into debt. They speculated because money was cheap and easy, and that caused the 2008 crisis. And in 2008, this is the part where I think they really lost control of the narrative, because they created all of this QE. They printed money. They lowered rates to zero, and they printed a lot of money. And at the time, I kept asking the question, how are you going to unwind this? And Bernanke at the time assured the entire world, yes, this is temporary. We'll be able to normalize rates and unwind the balance sheet. And that's when I called BS, because I said it's mathematically impossible without imploding the system again. But to their credit, they convinced Wall Street. And that's why when gold went to 1900 in 2011, it had that big run because people saw all this money printing. But then they were convinced that the Fed would eventually normalize the situation. And I kept saying, no. But they managed to convince the markets until about 2016. And that's when they first blinked. And they blinked by, they were raising rates slowly, and then they stopped. And I told all my people at that time, the game is on. They're not going to raise them any further. And I promise you within the next couple of years, they're going to drop them again. This is exactly what's happened. And what I did an interview last August where I predicted that we would see rates go back to zero, additional QE. This was before the pandemic. No one predicted the pandemic. I knew that there was an immense global debt bubble, which lands at about $260 trillion. It's an incredibly dangerous situation, and something was going to pop it. I would have never imagined the pandemic, but it required something. And that's what happened. And when it popped, it now allows the Fed to be in forever money printing mode. And that's exactly what's happening now. They've clearly indicated that this money printing will go on for a very long time. They've clearly indicated that they no longer fear inflation. They actually want to overheat the economy. And as you can also see on the fiscal side, they're running huge deficits. I predict that by the time this year is over, it'll be a $5 trillion deficit in the US. And here's the part that most people don't understand. There's no distinction anymore between fiscal and monetary policy because all of that debt that is issued is being purchased by the central banks. Because when rates are at zero, who's going to buy treasury bills, especially when you're printing money? So it will be the central bank buying its own debt, monetizing all the debt. So all of it, the fiscal deficits and the QE, will become one and the same. And so I think we're coming into a decade now where we may see a $20 trillion balance sheet for the Fed. And that will be absolutely impossible to unwind. It was impossible in 2008. In 2008, we were at the edge of the event horizon of a black hole. We're now squarely in it. You can't get out. There's mathematically impossible for us to get out of this. And so the only thing they can do with all that global debt, government debt, corporate debt, fiscal debt that will never be paid back is to inflate it away. And that means printing more money so that the creditors will get paid back in nominal dollars, but they were going to be worthless dollars. And I think that's a global phenomenon that's taking place. It's not just happening in the US, it's happening in Europe, it's happening in Japan. Everybody's in money printing mode. So now is the time where you have to think about what's happening with all that money that was in bonds, like trillions and trillions of dollars in bonds. That's going to have to find a new home. So it's either going to go into stocks, and that's why stocks are so overpriced, or gold, or other hard assets. So I think that we are in a period of time where gold, which just surpassed its old high, and I said this last summer.
In US dollar terms, it passed its old high long ago in Australian dollar terms, Canadian dollar terms, in fact, most of the world. And finally, the US dollar is wobbling, it's cracking, and in dollar terms, the gold price is shooting up.
Well, I don't know how anybody can make the case that the US dollar is a safe haven asset anymore. How can you make that case?
What happens if all the stimulus doesn't have a huge effect because people simply don't want to spend money anymore? They don't want to travel. COVID is still with us a year from now. And in fact, the economy goes into a tailspin, the Dow craters. What happens if there's deflation rather than inflation?
I think you're going to see stagflation. This is where we're headed. We're headed towards a period like the 1970s, only much, much worse. You have so much printing of money, it's going to drive up all the prices of commodities.
Excusez-moi. Go ahead.
We can leave that in. So commodities are going to start to run. So the cost of goods are going to increase, but you're going to have very slow growth. So you're not going to have the inflationary forces happening from jobs. You're going to see it in the cost of goods, and it's going to end up in the cost of goods, manufactured goods. So I think you're going to see a long period of zero growth or very low growth and very high inflation, which is the worst of all worlds. I don't see with the amount of money that they're printing, deflation is not going to happen.
Yeah, I mean, I don't disagree with any of that. I mean, I'm a student of history as you are, and you can go back 5,000 years. Every single civilization, every empire has always debased its currencies, leading to devaluation of the currencies and gold keeping its purchasing power. It's a real simple, direct line. And this is, to me, as you said, this is on steroids, particularly with what COVID is doing globally. There just doesn't seem to be any notion of value in fiat currencies. And that's why some people are moving to gold.
Yeah, and I think it's and I'll tell you anecdotally what I'm seeing, and it's really fascinating. People are just starting to wake up. Investors are just starting to wake up and smell the coffee. They're not looking at gold. They're dabbling. I remember the day that gold passed 1900, which was the old high in U.S. dollars. I had 3 calls that day. I've been telling lots of my well-to-do friends, put some money in gold, invest in gold. And for a long time, almost all of them did not listen to me. Like, I've been begging people to buy gold for the last few years. The day it surpassed 1900, I had 3 calls from 3 very good friends of mine saying, what was the name of that gold ETF you were telling me about? And I'd like to buy it. So they're starting. But just as many people, I've had the same conversations with several other of my friends who I keep saying, will you please buy some gold? I'm not telling you to buy mining stuff, just buy some gold. And you know what they tell me? No, my broker says it's too risky. I'm making so much money in the stock market right now, or I'm going to stay in bonds. Bonds are the worst possible thing you can be in. Get rid of your bonds and at least buy real estate, buy something that's real. Bonds are going to get destroyed in this, absolutely destroyed. And so will, unfortunately, savings. Savings are going to get destroyed.
People who understand gold today aren't the millennials. They're people who are like Venezuelans, Zimbabweans, people who have seen rampant inflation, people who have seen the destruction of the value of their own currency, Argentinians, anybody whose currencies have gone down. Well, I'm a geologist, Frank, not an economist, although like economists, geologists also have many hands. But I look at the gold from maybe a little different angle, and that's the supply side. Mm-hmm. And how difficult it will be for the gold industry to ramp production up with a tripling of the gold price. Because mines are harder to find today. There's not as much money going into exploration, or hasn't in the last 10 years, certainly. And because there's a lot more people having a lot more wealth in a lot more places in the world, it's much more difficult to permit a new mine. Anywhere.
So typically, and this is a really good point, how long does it take?
20 years.
Discovery
today,
and production.
20 years today. It would have been 5 years, 20 years ago.
And exactly. This is what I think the point that most people miss.
It's
the lead time.
It's the lead time, and it's also actually the fact that the great gold deposits, like the great copper deposits and great iron ore deposits, they're pretty well known, and many of them have been depleted. So we have to go to lower and lower grade ore bodies. They do exist. They will be mined someday. But the high-grade easy stuff is gone. And it's getting harder and slower and more expensive to find these things. So you're not going to see, the main lesson there is you're not going to see a huge supply response to a rapid rise in the gold price for now. Eventually, of course, the supply response will come, but it's not going to be for a long, long time. So we're in a party mood, I think, in the gold business for quite a few years now.
Well, I think so. And how it plays out could be many different ways in terms of the length of this bull market, how high it goes. I mean, people ask me all the time, I go, pick a number. I have no idea because there are so many dynamics at play that will influence how fast it moves up and how high it goes. And seriously, pick a number. It could be any number at this stage. What I do know for sure, I've been mapping this since 2001, and I started writing about this at the beginnings of the first phase of this, what I call the overall gold bull market. And that lasted from 2001 to 2008. That was the first phase. Second phase was 2009, 2011, when it went to 1900. And the third phase started 18 months ago. And this will be the most explosive phase of all. This is the final phase. And this is where at some point, because I honestly believe we're going to have a dollar crisis. At some point, there'll be a dollar crisis. I mean, you just can't print money forever in those quantities and not have people go, whoa. And so I think that it will be the very explosive phase, and who knows where it'll take gold. But it'll happen in probably in the next 2 to 4 to 5 years.
Well, people have asked me, what will gold do now that it's broken through its all-time high? And my answer is really, well, there's nothing magic about $2,000 gold. It's just a number. Gold could be 3,000, 4,000, no problem. The way say palladium used to be $170 and now it's $2,200. I mean, it's just a number, and it's just in one currency. So there's no magic to that number. There's nothing whatsoever fundamentally different today than there was 2 weeks ago, or there will be 2 weeks from now. The gold market is strong. The gold bull market is intact, and it's going to run longer and harder than any of us have ever seen in our lives. Where to? Who knows? When it's going to fizzle out, which it will someday, who knows? But we're in the middle of it, and as you said, it could well be completely explosive for quite a few years.
Yeah, and I tell a lot of people, even those that don't really understand this side of the investment market, is think of it as insurance. Just you're buying insurance for your portfolio. So at the very least, own 5%, I would say 10% of your portfolio in gold, and just forget about it. Don't look at it every day. It's going to go like this. It's going to trade up and down. But that's your hedge against everything else that's going to go wrong. And something is going to implode. The system is too over-levered. Something has to give. Physics, you can't argue with physics. Eventually gravity sets in and it's going to bring the system down or correct it very dramatically.
Well, some people buy gold bullion. I personally don't. I buy gold stocks, and I develop gold mining companies.
Tell me why.
And as we noted just on Friday, a few days ago, Warren Buffett has decided to go in and buy a gold stock. He's never had any time for gold. He always considered it a fool's relic. But he bought Barrick because he wanted a profitable company that's going to have rising margins. And so the gold stocks, to me, are the way you play this. If you believe in gold, you get the leverage with the gold stocks.
Absolutely. And you get it, because I would assume that we're going to be able to keep our mining costs fixed for a few years. We got them under control over the last number of years, and you would hope that they're going to stay in and around the $1,000 all-in costs. If you make that assumption that those costs are going to stay stable, think about $1,000 margin then becoming $2,000 margin, and you apply a multiple to that, and that's why you would buy a mining stock.
There you go. Well, let's change the subject a little and now start talking about some gold stocks that we both like and we're involved in.
Well, it's interesting. I think we have, and maybe you might correct me, but I think you and I have a very similar business strategies when it comes to building gold mines. So, and correct me if I'm wrong, my first one was the Wheaton River. So when in 2001, I decided I wanted to be in gold, and I thought the gold was going to go up, I organized a number of people in the mining world and the finance world, and we launched Wheaton River, which became Gold Corp and became one of the greatest success mining stories of all time in terms of a creation. I think that one was a magical moment. It was just the right people at the right time coming together. I think at one point Gold Corp had a market cap of $50 billion at its high. I took the same formula with Neil Woodyer and built Endeavor starting in 2009 when the second bull market started, the second phase of the bull market. Same idea. Build a gold mine through acquisition mostly, using M&A, and building some mines, getting some development projects that are fairly advanced, building and get to scale fast. And then in 2016, I decided to do it a third time, which was Leia Gold, which I was chairman of. And again, the plan was the same. And when you approached us with Equinox, it fit into the plan. How do you get bigger as quickly as possible? And that's why we merged our two companies. And you became chairman because you actually like that. To me, it's just work. I prefer packaging these deals, making them happen, sure, and seeing them work. But
usually we think the same, but we are different, Frank.
Yes, we are very different. Well, you got this mustache, which is very distracting.
I really forgot to apologize to the audience here. This is a COVID mustache, and it will be gone next time you see me. Believe me.
Promise.
So, I have a different background as a geologist and as a developer. I'm not really an investor. You've typically taken more of a role as an investor in things, as a financier mainly. But I've built things. But I happen to have this abiding love affair with gold for all sorts of reasons. And And yes, my first company was Equinox Resources, a gold company. We had some gold mines in California and Nevada. And through my own journey, I've had, I think this is my 15th company. But along the way, of course, I didn't just love gold. I also love silver, which is poor man's gold. It's the proxy in many places for gold that a lot of people like to play. In fact, a lot of people in the States like silver even more than gold. Can you believe it?
I believe it. I've seen it.
And I started Pan American Silver in 1994. Confidently predicting that silver at the then price of $5 an ounce was going to be $10 an ounce by the end of the decade. And I was more persuasive than Robert Friedland on that story. And of course, 2001 came along, and silver was $4 an ounce, not $10 an ounce. It was lower than when I started. But despite that, we built a mining company that was based around trying to become the world's preeminent silver mining company. And through a lot of hard work and a lot of horrible mistakes and calamities and snakes that sought to destroy us, we managed to make it through all that. And today, Pan American is also a great silver mining company, which I'm incredibly proud of having founded. But it's a big company now. It's a $10 billion market cap company. It's incredibly well run. It's got great finances, great earnings. All that stuff's good. But fundamentally, it's a silver company and really one of the world's great silver companies. And that's feeding demand by many investors for a silver equity investment that will give them leverage. And it's hard to do in silver because it's mainly a byproduct metal. So mostly, silver comes from zinc mines or gold mines, but not primary mines. Whereas there's a lot of gold companies out there, and this is good for investors. There's a lot to choose from in the London Stock Exchange, the Australian Stock Exchange, Canadian, US. But I started Equinox Gold as my last company really because, like you, Frank, and almost at exactly the same time, in 2015-16, I started going big into gold. I had Lumina Gold, which was just getting going then, Luminex Resources, just getting going then. I had a bunch of investments in other companies. But, I wanted my last hurrah to be a gold company. And so in 2018, we started, very beginning of 2018, we started Equinox Gold, and then, of course, did the merger with Leagold last year for exactly the reasons you mentioned. In this market, and to some degree, it was because things have changed in the investment world as well over the since we've known each other 30, 35 years. Things have changed. So the market today rewards scale much more than it did 10 years ago, even 5 years ago. The importance of the ETFs, of the robot investors, the quant funds, all of those players in this world that don't really necessarily look at value. They look at size, they look at liquidity. And so that was worth building something big for. Plus, the bigger you are in the gold game, the more leverage you have to both the immediate change in the gold price in your production and your income statement, as well as in your reserves and resources, which are your long-term store of value. So it was just exactly what you said. We wanted to go big quickly, and that's exactly what we've done. And I'm very, very pleased. And it's worked out like
I'm pleased because I'm a shareholder, and you keep working hard, buddy.
I will do so. It's been a lot of fun, and it's been very rewarding. But also, it's been rewarding that we've both kind of called the gold price and the gold cycle right. And so, back to gold, I mean, what are the ways the party could end? What are the ways, is there anything out there that you worry about that gives you pause to your thesis?
I don't think so, and I've thought about all of it. It's almost a perfect storm in favor of gold right now, because I can't think of a single factor that is aligned against it. Raising interest rates, absolutely impossible. You implode the entire global economy if you even raised them 1%, and everybody knows it. We're in zero interest rate forever until something gets restructured in the global monetary system. So it won't be rates, because it's usually interest rates that drive down gold. That's just not going to happen. So then you look at the geopolitical side. Are we going to have global peace tomorrow? No. Right now we're living in a very multipolar world. The old world order is dead. There's no leadership. America's doing its own thing, and then there's the America-China conflict. You've got Russia, you've got Iran. I don't see a scenario where you're not going to have geopolitical tensions and potential wars for a long period of time until something is resolved. So I don't see peace at hand.
It hasn't happened for 5,000 years. It certainly isn't going to happen in
but
the
at
next
least,
5 years.
but at least during the Cold War and during the 10 years of U.S. homogeny after 1990, you had a relative era of peace. It was Pax Americana, you know. And so in that time, you knew that it was a world order. People played by the rules. There are no more rules. It's a free-for-all right now. As you know, I sit on the board of Crisis Group. I'm the co-chairman of Crisis Group. We're in the business of resolving deadly conflicts. And so we monitor this stuff. We have people on the ground all over the planet. And I can tell you that this is probably the most dangerous environment that I've ever seen.
Well, Frank, you mentioned Crisis Group. Let's shift the conversation a little bit to, you know, beyond the gold business, to what else is important in your life and what else is important to you. Because both you and I think, have a shared interest in philanthropy. We're doing different things, but we've both got more money than we'll ever need. And it's time to look after other things that are important to us. What's driving you in that department?
Well, you're right. As I'm fond of saying, and when I stepped down as chairman of Leia Gold, actually, we put it in the news release that this gave me the opportunity to now focus exclusively on philanthropy. Of course, I love to invest. I can't help myself. I love to invest in all these deals, but I will not run anything anymore or be chairman or sit on boards. My life is philanthropy, and the reason is because I've been lucky. You know, do I deserve all of this luck that I've had? I've had a great life. Obviously, you know, I was in the right place in the right time. Things worked out, and I made, you know,
You made your luck.
I made my luck, but I was still lucky.
Yeah.
Do I deserve all this good fortune?
Yep.
Do I work any harder than some guy in some developing country that, you know, is struggling, or, you know, even here in North America? So I thought to myself, I have more than what I need. So everything else goes into my foundation. And I adhere to the Andrew Carnegie philosophy about wealth. He wrote the Gospel of Wealth in the late 19th century. And it basically, in very simple terms, it basically said, take whatever you need to live a good life and take care of your family. The rest is called excess wealth. And that should be used under your guidance to better the communities around you and society around you. And that's really how I've lived my life. And I really enjoy it. I like the fact that it gives me purpose. I feel more at peace with myself that I'm taking my good fortune and helping others. And I want to spend whatever years I've got left on this planet trying to in a positive way impact as many lives as possible. And I do it in so many different areas, nationally and internationally. I just mentioned the Crisis Group. I've just been on that board for 15 years as the world's top organization for preventing and ending conflict. We've done some amazing work in places like Colombia and Yemen and Sri Lanka, and it really is it's hard work because, you know, resolving deadly conflict is so hard. But in my view, without peace and security, you have nothing else. You can't really address any of the other social ills of the world. You have to have peace first. So I just became co-chair of that organization, and I will dedicate the next 3 to 5 years of my life to helping them grow and stay healthy. So that's a very big part of my life. The other big part I started in 2007, which was to find ways to alleviate poverty on a scalable and a sustainable basis. And we worked hard for many years to develop models that actually work. And they work almost under a business structure, although it's not a business, it's a foundation, so we don't take profits. Profits get plowed into new ventures. But the idea was to create these farmer services organizations in places like El Salvador and Haiti and Colombia. And we've been in other countries since where we've tried pilot projects. And basically, it just reverse engineers demand from big institutional buyers of specific farmed products. And then we organize the farmers at the other end, train them, give them the inputs, the technology, financing, to be able to deliver at the quality and quantity levels that are required. And then we build a supply chain in the middle for storage and distribution. And it's worked really well. And so we've been expanding that. And it's a formula now that's getting the attention of lots of other players. And it's my hope that we can now expand it to other countries that, you know, because the concept is very very simple. Any place where you're farming something that's of value at scale to an end buyer, it's so that's the second. I put a lot of my wealth into that one. That's called Accesso. And then I've done a lot of refugee work, as you know, first starting in Greece and Turkey and Lebanon during the Syrian refugee crisis, and now working here in Canada. We came up with the Global Refugee Sponsorship Initiative, which was launched by the Government of Canada, Open Society, which is George Soros, and University of Ottawa and UNHCR, and basically was taking the proven Canadian model of bringing refugees in under private sponsorship by individuals and communities. And now we're taking that to other countries around the world and training them and helping them create their own systems, because, as you know, the refugee situation is not getting any better. It's just, there's 80 million refugees out there in the world. So that's a big stuff. And then I do a lot of stuff locally. I support a lot of organizations, and I do a lot of stuff here locally in Vancouver. But that's my life, and I love it. This is where I spend 80% of my time, is doing that. And you know what? It gives me peace. Well, I know you're into conservation and environment.
Yeah, I mean, I'm listening to you, and I'm really thinking there's a certain clone there in me, because I could say the same as you said in terms of your passion for what you are supporting philanthropically. In my particular case, my box is nature. My box is really, I'm putting all of my philanthropic effort now, and it's most of what I do, actually. It's, again, about 80% of what I do, into trying to protect the environment and protect biodiversity. This is, for me, the most important thing I can do, because if you think about it, less than 1% of all giving goes to nature. 99% goes to human things, which is fine. Anybody who gives is going to go to heaven. And what I do is support that 1%, because the millions and millions of species that live around us nurture humans. Without that, without a healthy natural environment, humans can't exist. We need healthy air, healthy water, healthy food, without which we're finished. And over the last 50 years or so, we seem to have forgotten that. We have evolved our economy based on growth, based on debt, based on pouring money into things. We've created a world which is hammering nature. And now we're starting to hit road bumps. We're hitting these limits, these barriers. We're degrading our water, our groundwater particularly. In many, many places in the world, the groundwater is getting much more contaminated. It's being extracted at much too quick a rate. We're exhausting our soil. Carbon content of the soil is plummeting, which means we have to pour fertilizer on it. Fertilizer itself is causing all manner of unforeseen consequences. We're trashing nature by exterminating. 80% of our big mammals are gone now. Most of the big fish in the sea are gone. They're gone forever. Those gene pools are gone. All of these things humans need. So to me, the biggest service I can do for my children and their children is to try to help nature. And it needs help. And it's something that we've got to evolve our society into a more sustainable direction, which is one thing I think that, quite frankly, COVID is a kind of a wake-up call. Mm-hmm. Because COVID has created a forced change in how we live and how we work. Now, if everybody else also understands that to create a society which is a more sustainable society, which is living more in sync with our actual natural endowment of the earth, instead of sort of 3 or 4 Earths worth, we will actually live in a much better way for our children and their children. And it's all about consumption. It's all about how we live, what we eat, how we travel, what we do with our spare time, how we work, all of those things. So I really think COVID has catalyzed a shift. It's an important and it's essential shift.
Do you think, and I totally agree, I actually wrote an article on this, on how I saw changing behavior during COVID. And certainly, we've been addicted. We live in a world, because of the way that the business environment is structured, where it's based on growth. Yes. Everything's about growth. Without growth, you're put out of business. If you can't demonstrate growth, you're done. The markets won't pay you.
Banks need it.
Yeah. And so how do we transition? Because it's the growth that's killing us.
Totally.
And what I noticed during COVID and in the lockdown period of COVID in the first few months, we consumed less. We didn't travel. We didn't pollute. But it was mostly about consumption. Like we just we just stopped consuming in the ways that we used to.
But the consumption decline also hurt millions and millions and tens of millions of people. So it's not the only solution. To me, a better direction actually is not just getting things going again and changing the style of our economy, the style of our business to a more sustainable one. It's also addressing inequality.
Well, inequality, I mean, you don't get me started. I think one of the greatest, because this one really upsets me because, I
knew that would happen.
Well, you have to allow me to
Which
rant
is good.
here because this is the part that I think escapes most people. The Fed behavior that started in 2001 and has only accelerated in the last 20 years, all it managed to do, create the worst inequality North America has ever seen. It's created it gave access to free money to those that could afford it and already had it. That money was not available through the banks to the normal person on the street. So it's having a double effect. So the rich are getting extremely rich because they can use free money to buy assets, stocks, real estate, whatever. The poor don't have access to it. And obviously their incomes have gone nowhere in the last 30 years. Like nowhere. They haven't moved at all. And you've created a very dangerous environment. And a lot of the political turmoil that you're now seeing with the populism and all of this hatred is a function of people being angry about inequality, which in my mind was, and I hate to blame one single person, but Greenspan started this, and he didn't take any responsibility for it. Sure enough, Bernanke and the rest all followed, and they all did the same thing. Yeah. But I'll tell you, I think that cheap free money is what destroyed really the fabric of America.
Well, let's stay away from politics because there will be people with different views here, as tempting as it is.
I did ask permission
as fertile,
to rant.
as fertile as the ground is. Let's stay away from that. But I think all the time, how is this going to end? How are we going to get out of this COVID world, and what is the world going to look like? I think it's established, coming back to kind of gold, it's established, and we have an absolute conviction in this, that gold prices are almost certain to go higher for an extended period. I would say that's all we can really say. We can't say how high, exactly when, but there's nothing that's changed today that was different a month ago, or that's going to be different in 6 months from now. So gold is good. My view is maybe some of the other metals might not be good, but it's a very good thing. One thing that is good is that, of course, mining is always going to be needed. We always have to have a mining industry, whether we have a green economy or a brown economy. And in fact, the green economy probably will use a lot more of certain things like copper and nickel and those kind of metals, and perhaps less of other things like thermal coal and even met coal maybe and iron ore. But so there'll be winners and losers in this world, in the metals business, and the companies and investors will suffer that. But I can't quite see how this is going to end in, financially. I don't really know what's going to change the debt, the debt cycle, the debt whirlpool.
Yeah, sadly, collapse.
I mean, it will be collapse. Yeah, it will be a crisis.
There's no other way. You can't pay back that debt. It's impossible. You can only do what every other country has done throughout history, is destroy the currency, so you don't have to. You pay it back, but you're paying it back in worthless currency. And but
that's not a collapse. That's a design.
Collapse happens. Well, a collapse happens when you hit hyperinflation. So if we get hyperinflation, that in itself will bring about collapse, as it always does. Look at Venezuela. Look at Zimbabwe. Look at any nation that's gone through a period of hyperinflation. Eventually, you have a collapse, and then you have to restart. And what happens is those with savings get completely wiped out. Those with government bonds get completely wiped out. The survivors are those that own hard assets. It could be stocks, real estate, gold. And that's what's going to happen. We're going to have a complete restructuring of the global monetary system. I have no idea what's going to emerge and replace the dollar. There are many possibilities, but something has to.
What about taxes? Americans in particular, anathema to higher taxes, but we don't feel quite the same in Canada. We pay much higher taxes than Americans. And, look at other very, very successful models like Scandinavia. All of the Scandinavian countries, Iceland, Denmark, Finland, Sweden, Norway, they're very successful economies, but they pay 60% or 70% marginal tax rates. And look at what they have: free education, great medical care, and a very functioning society.
I think, and again, I don't want to get into politics either, but I think the right has done an incredible job of labeling socialism as something that creates failed states. Like they tie the word socialism to what happens in Venezuela. They'd never try and attempt to look at the Scandinavian countries and make that comparison. I think, listen, I've always been a free enterprise. I believe in free enterprises, but that's not what we're living in. We're living in a world of crony capitalism. It's only those elites that have access to money and power get richer and richer, and everybody else gets screwed. And I think that the end game, you're going to have a complete restructuring of the system. And I don't know how it's going to come about. I just hope it's a very peaceful one, because normally they're not. And you have to basically start over again. And you have to start with new rules and just have to wipe the slate clean. And it's happened throughout history, and it'll happen again.
I've always, and most particularly the last 10 years, believed that the growth model, as you talked about, which relies on growth to make industries function well and banks function well, and it's just what we've lived through, and has been juiced by ever-increasing amounts of printed money and indebtedness by governments, especially since 1980. The increase in debt has absolutely paralleled the growth rate in the world. It's impossible to sustain. We just cannot do it. We'd need 300 million barrels of oil per day, compared to 100 billion today, in just by 2050. The whole world economy would have to be 3 times bigger. It's inconceivable. We don't have the land. We don't have anything natural. So it's got to change. And yet I don't know quite how we're going to make that shift. It's either going to be by design or it's going to be by disaster. And so I'm hoping that COVID actually is a bit of a catalyst, as I said, for this shift. Now, it's not going to be the shift in the financial sector. That's going to have to come from different things. And I'm not smart enough to really know how that's going to evolve. I hope it's not by collapse or by disaster. That would be unhappy for a lot of people. It's unhappy for a lot of people today, but I think what you're saying is it's going to be extremely unhappy for a lot of people tomorrow. And let's not wish for that. Let's hope that clever minds are able to dig us out of that. And it may be through increasing taxes. It may be through modest inflation rather than runaway inflation. And it may be actually just changing how we think and how we live and how we act and what we love doing. It changed into a softer form, which is no less happy. I mean, if you measure human happiness, you don't get happy by consuming junk. You get happy by things that you love, eating good food and having good friends and having a nice family and those kind of things. Those are the things that I hope in the world to come that will also luckily be a world where there'll be probably fewer people. And not by any kind of calamity, but because women are choosing not to have babies. There's more than 100 countries now that have negative fertility. Males actually are losing their sperm count. The sperm count of men is declining rapidly because of all the crap that we're eating, and we're getting all of these chemicals in our system. And if you Google male sperm count, you get some big surprises. So, the population of the world is sort of peaking out at 7.5 billion. Maybe it could go up to 10 billion by 2050, but then it's going to fall off a cliff, the way it's doing in a lot of our countries already today, like Japan and Russia and places like that. So that side is going to be more sustainable. We're not going to have this inexorable doubling of the world population forever and ever. And I guess I hope that really my vision of a happy future is one where we will get to a more modest consumption rate, a more modest population, living more within our means. We'll trash nature a little bit less. We'll understand there's other ways to live. And maybe COVID's helping us get there. But through all of this, the financial world will be healthy for owning gold. And thus, a happy time for gold mining stock owners and gold mining CEOs and employees. This business that we're in is going to be happy for longer, and it'll be stronger than we've ever seen.
I think this is the era of gold for sure. I'll just summarize, but Ray Dalio speaks often about the paradigm shift that's taking place, and that shift is a shift that follows a long-term debt cycle, and we're coming to the end of that 70-year period, and people have to be prepared for a very different type of investing. And, I think people have to recalibrate by looking at what's happening, what are the value of bonds in an environment where you're printing money and have zero rate of return or negative rates of return, real negative rates of return, which we're actually seeing. And gold will play a central role for a long time to come in all of this. But I just want to go back about one little thing because I want to agree with you about something. I do believe that we need higher taxes or else we're in real trouble. Because if we continue with these, multi-trillion-dollar deficits, which are getting easier and easier to do now, it's leading everybody to financial ruin, and it's going to lead everybody down the drain. So I think, and I don't know if you know this, back in the 1950s, when America was at its height of productivity, the marginal top tax rate was 90%.
Yeah.
And then now, you can't even have that conversation. Right. People are not willing to.
For better or for worse, that's 2 bits from Frank Giustra and Ross Beaty. Thank you again for listening.
Thank you. Thanks, Ross.
Thank you.